Welcome. This is a short workshop on credit basics. We will discuss briefly the topic of credit and its uses. As we go through the slides and information, if you have any questions or need any clarification, please contact a financial counselor at the credit union. What is credit? The Oxford Dictionaries provides 4 definitions, 2 as nouns and 2 as verbs. The ones we're concerned with defines credit as the ability of a customer to obtain goods or services before payment, based on the trust that payment will be made in the future. What types of credit exist? Installment. You borrow a specific amount of money from a lender and agree to pay off the loan in regular payments of a fixed amount over a specified time period. Examples: home mortgages, car loans, and student loans. Revolving credit. A lender has extended you credit up to a certain amount that you're free to use repeatedly. So as long as the account remains open and you make regular on-time payments of at least the minimum amount due. Examples: credit card, home equity lines of credit, and gas cards. Open credit contains elements of both installment and revolving credit. With open credit, the amount due is usually different each billing cycle, and the amount is typically due in full. Examples: utility account, gas, electric, and water. Consumer credit comes into play whenever you borrow money as an individual. The person borrowing is responsible for making payments. The information about amounts borrowed and the scheduled payments is recorded on that person's individual credit file. Number 1, consumer submits an application. Number 2, financial institute reviews the application and the consumer's credit report. Number 3, loan officer will approve or deny the application. Number 4, if the application is approved, a disbursement will be made or a credit card will be issued to the consumer. Number 5, the consumer will purchase their desired item. Number 6, then depending on what type of credit they receive, disbursement or credit card, the consumer will begin making monthly payments towards the balance until the amount is paid in full, including interest charges, which is the cost of borrowing money. Some common uses of credit include vacation and personal loans, furniture and student loans, new and used auto loan, small business loans, overdraft protection, home and auto repairs, mortgage and real estate loans, debt consolidation, payday loans, credit card purchases. Do you have another use of credit? What are the common sources of credit? From friends and family, home equity, against retirement funds, payday lenders, pawn shops, cash advances, payday lenders, against insurance funds, rent-to-own companies, banks and finance companies, and last but far the best place, credit unions. Please note, making a loan against retirement funds can only be made between the account owner and the company holding the asset, such as 401k. The consumer cannot use an IRA account as collateral for a loan. What are the 5 C's of credit? Character reflects the degree of honesty and integrity of the borrower. Capacity looks at the consumer's income to determine that their income is sufficient to pay their financial obligations. Collateral, something of value that secures the loan, that helps to assure payment of the loan for the benefit of retiring the asset. Our failure to maintain payments could result in the loss of the asset. Capital, the down payment by the consumer representing their stake in the entire process. Conditions, outlines the conditions and terms of the loan, including the amount of payment, interest rate, number of payments, etc. Do you think people are more likely to buy something they don't need when they use a credit card? Sure, and why not, as long as they stay within their credit limit. Would you? Do you think people think about the rate that they're paying on a credit card? In many situations, no. They don't think about the rate on their credit card. Do you? What difference does the rate make? What do you think determines the rate consumers pay on a credit card? The credit score. Do you know your credit score? Why is the credit score important? What is the cost of credit? Generally, when you think of the cost of borrowing, the first thing that comes to mind is fees and interest that we pay for obtaining credit. What are common fees? Maintenance, service, and late fees. What about the interest? Is there more than one type of interest? Yes, fixed and variable rate interest. Are there other things associated with the cost of credit? Let's look at 3 different scenarios. First, using our savings to make a purchase of $1,000. Is there more to the cost of other than the $1,000 reduction in your savings? There is always a time factor to consider. Second scenario, what is the cost if you have good credit? Here you would have the typical fees and interest. How does time factor into the cost? Third scenario, what is the cost if you have bad credit? Would the cost increase from the second scenario? By how much? Should you always use credit? People answer this question differently. Sometimes it's yes and sometimes it's no. It all depends. When to use credit? It's great to have for emergencies, family crisis, unexpected illness, etc. It allows for the benefit of having large items such as a home, car, and appliances while still paying for them. It could be a convenient way to manage income by keeping track of spending, provided statement balance is paid in full every month. When should you consider not using credit? When using credit can lead to spending beyond your means because it is so convenient and easy to use. If one is tempted to live on credit, again, due to convenience and ease of use. When credit takes away the opportunity to use the income that pays off the credit, which is needed for other things. When there is concern that the credit cards and credit account numbers may be stolen and used by others. Surely you could think of more reasons than what is listed here. Before using credit, you should ask yourself a few questions. These questions can help you decide. Is this a necessity or a luxury item? Do I really need this good or service? Can I meet my obligation to pay for it without hurting my existing cash flow or without sacrificing my monthly savings objective? Do I really understand all the terms and obligations I am agreeing to with this purchase? What is the cost of financing? Are there any consequences to this purchase? Can you repay the debt without paying interest charges? What is the useful life of this product? Will it outlast the financing? Here are 6 habits to help you use your credit wisely from CapitalOne.com. Create and stick to a budget. With a budget, you know how much more monthly debt you're able to take on. Borrow only what you can afford to pay back. A general rule of thumb is to spend no more than 1/3 of your income on debt. Pay your bills on time. This shows current and future creditors that you're responsible. Carry credit card balances responsibly. Making your payments on time each month and pay more than the minimum payment. It is beneficial for you to keep your outstanding balances at 30% of the credit limit or lower. Check your credit reports at least once a year. This can avoid errors and will enable you to catch identity theft. You are entitled to a free copy of your credit report from each nationwide consumer credit reporting company, Equifax, Experian, and TransUnion. Phone, mail, or visit www.annualcreditreport.com. Take advantage of technology and tools to avoid credit pitfalls. These can include online, mobile, and phone access to your account and bill payment options, statement alerts by text, email, or phone, instant free transfers to and from your other accounts, and free transfers to your account from most other banks and brokerage firms. Did you ever stop to think about credit? Is your credit good or bad? What can good credit get you? Almost everything you want and need. What can bad credit get you? A few of what you may want or need. Will you get a credit card or a loan? Well, of course you can. There are always an organization out there that will grant you credit, but at what cost? Usually the better the credit, the lower the interest rate on the loan or credit card is. If the credit is bad, organizations will still grant you credit, but will they charge you more interest to borrow? Could you live without credit? Sure you can. But to buy high-ticket items, you must have discipline to save the funds you need for the purchase. It's possible that you won't be able to rent a car or a hotel room if you go on a trip. And if the emergency comes up, you may have to borrow money from friends and family. It's hard to imagine, but credit is a necessary evil. We can get by without it, but we can go further with it. The next session is on credit scores. Learn how you can increase your credit score and learn what can reduce your credit score.